Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into ZYNEX Incorporated's latest proxy statement. Think of it as a school election, but with way more money and medical devices involved. Get ready because the numbers tell a different story than what you might expect. First off, what is a proxy statement anyway? It's basically a document a company sends to its shareholders before an annual meeting. It tells you what's on the agenda, who's running for the board of directors, and how management wants you to vote on important issues. It's like a cheat sheet for being an informed investor. ZYNEX is having its annual meeting in May of 2025. The main things they need stockholders to vote on are pretty standard. Electing directors and ratifying their choice of independent accountant. They want you to say yes to Thomas Sandgaard, Barry Michaels, Michael Kress, and Joshua Disbrow to be directors until the 2026 meeting. They also want you to approve their pick of CBAs, CPAs, PC to handle the books. Let's meet the nominees. Thomas Sandgaard is the founder, president, CEO, and chairman. That's a lot of hats. Barry Michaels brings financial expertise from a long career in the medical device industry. Michael Kress has experience running hospitals and healthcare companies, and Joshua Disbrow has a background in pharmaceuticals and biotech. It's good to know that the board believes that 3 of the 4 directors are independent. That means they don't have any major financial ties to the company, which should help them make decisions that are in the best interest of all shareholders. The board's also in charge of keeping an eye on risks. They have committees to oversee things like financial risks and making sure the company is following the rules. One of the most important committees is the Audit Committee, which makes sure ZYNEX's accounting is on the up and up. They hire the outside auditors, review the financial statements, and generally act as a watchdog. The board seems to think these committees are doing their job. Speaking of auditors, ZYNEX is asking shareholders to approve their selection of CBIZ CPI's PC. In 2024, they paid Markham LLT, who they used to use about $716,000 for audit services. Important to note that ZYNEX changed auditors because CBIZ bought the audit business of Markham. It's important to highlight that Markham resigned as their auditor, and it's written in the statement. It's good the company is up front, and now the audit committee approved CBIZ. Let's talk about the people running the show. Besides Sandgaard, there's Daniel Moorhead, the Chief Financial Officer, and Anna Lusok, the Chief Operating Officer. These are the folks who handle the day-to-day operations and financial management of ZYNEX. Now let's get to the money. In 2024, Thomas Sandgaard's salary was $700,000. Not bad. Daniel Moorhead made $415,000 and Anna Lusok's salary was $300,000. They got some extra money on top of that from some stock awards and incentives. ZYNEX also throws in some extra perks like covering the health and dental insurance for these executives. It all adds up. These executives get a lot of their compensation in stock awards, also known as equity. This is intended to make them want to improve the business and make sure the stock price increases. The company also has equity compensation plans that allow it to issue even more stock options and awards in the future. The non-employee directors aren't doing too badly either. They get an annual retainer, extra pay for serving on committees, and stock awards. Directors such as Barry Michaels are bringing in cash of $65,000, along with $110,000 in stock. It all adds up to $175,000. Not bad for attending some meetings. Now this is where things get interesting. The SEC requires companies to disclose how their executive pay compares to their performance. For ZYNEX, the numbers are telling. While the company's stock performance has been strong over the last few years, net income has decreased by almost 70%. At the same time that profit decreased, compensation for executives decreased slightly. And this all sounds like a bad thing that executives are getting pay when profit is decreasing. But in reality, the company is getting back to its baseline from the COVID times, which were outliers compared to what the company usually does. So pay reflects the reality that the company is getting back to its baseline from the COVID times, which were outliers compared to what the company usually does. So pay reflects the reality that the company is in a more tough environment. And decreased pay means they are on the correct track. The company has policies in place around equity and insider information, meaning they aren't intentionally using non-public information to manipulate executive compensation. Also, there are some issues of reports filed late, but everything seems good. Acting now that we've gone through the filing, let's put it all together. ZYNEX is a company that's trying to reward its executives for increasing the business with both stock and cash incentives. The stock component aligns them with shareholders, but there's always the question of whether the pay is justified by the actual performance. It's clear the board is watching and decreasing pay for its executives. As for what could hurt the company, there are always the risk factors, but it all depends if the company executes the business correctly. Overall, ZYNEX is an interesting company in a growing market. They've got some challenges, but they also have opportunities. It'll be up to management and the board to navigate the road ahead and deliver results for shareholders. That's all for today's Corporate Decoder. I hope you enjoyed the video. If you did, please give it a like, leave a comment, and subscribe for more breakdowns of the corporate world. Until next time.